All right. Happy Monday, Jennifer. Happy Monday. Oh, man. What a day. What a day. What a day. Mondays are always crazy days. Just getting back from birthday weekends and let's see. Jennifer said, when am I taking off for the procedure? Hope all goes well for you. So, yeah, I don't know exactly what's going on yet, guys. I probably will not teach the I'm getting a procedure done on September 5th on my knee. A little complicated. I don't know what is going to happen exactly the Monday after that, whatever that date comes out to be. I probably will not be teaching Power Hour that Monday. We'll see if we can't get somebody else to teach it. That would be like September 9th. Actually, I have both follow-up on surgery. No, PT starts on that day. PT starts that day. So probably not teaching on that day. I'm hoping not to really take any time off. We purposely did it on a Thursday with the goal that, you got Thursday and Friday, right, off, and then Saturday, Sunday. Hopefully by then I can move around a little bit. I'm not really sure just yet. So don't know just yet, but I will keep you guys abreast. Once I know, you guys will know. So as we do get started here, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something you like anything, make sure it fits your own personal risk profile or risk tolerance before ever taking on a trade or setup or adding any kind of indicator. Okay, so what do we got happening this week? So Inner Circle coming up tonight is the check-in. The monthly is Wednesday, the 21st. Mastermind group is the 20th. I will be doing the second half of our core strategy there. So that'll be a 2-hour training. Andrew, do me a favor, make sure Suzanne knows that and gets that out to everybody in Mastermind group that it is a 2-hour training on Tuesday night. E-mini Q&A, E-mini Think Tank Q&A is on the 26th, which is this Friday, 28th. We're getting into next week already now. Then we've got Power Hour Trading Coaches Playbook are all on regular schedule. Art of Cash Flow, guys, you got to check it out. Tripp's great coach. He does an amazing job. Power option plays, covered call on regular schedule. E-mini will resume back on August 21st. If you guys are friends with Brandon on Facebook, you'll see some of the pictures of where he moved to. Much different than the sand and salt water you saw. Now it's just grass and farm animals, right? But he's really looking forward to it. Yeah, thanks, Jennifer. I appreciate that. Here's our follow us page. Make sure you are following along. So we made a commitment as a team today. We finalized it. We're going to go to 2 full YouTube videos a week. We're going to start building a bank of them right now. So we've got them. I don't want to commit to it while I'm going into the procedure. But after that, you are going to start seeing 2 full, and we'll have 2 specific days of the week we release them on top of my goal of being 3 or more days a week on Trade with Rob. Right, which I'll share a little bit of the results with that with you in a little while. We're also going to be going very hard and heavy in one particular other platform. I'm not ready to divulge which one just yet, but I will as we get closer to it, to getting that done, where there's going to be a lot more activity going on of what we're doing. So I mentioned last week some of the changes we're making with social, with Mastermind and Inner Circle. You guys will have your own dedicated Facebook pages, and you'll have candidates come up there 5 days a week, whether I'm in the office or not, because my team knows exactly how to find the same candidates that I do for some of these setups. So you'll have trade setups potentially every day that you can work off of. And we're talking, I've never seen less than 10, as high as 25, which is a lot, but easily weeded through as far as price point goes to get the ones that you like. So we can have both Inner Circle and Mastermind along with the charts and the lines. Everything is right on there. We're going to be doing a lot more trade related social media posts coming out. So keep tuned in for that. Here's Trading Like a Boss Manifesto. You can download this right on our websites, plural, wealthbuildershq.com. You can get it on tradinglikeaboss.com. You can get it on robertjroy.com. Right, so hopefully you check it out. There you go, Trading Like a Boss. Andrew just dropped in there for everybody. When S&P 500 returns just aren't high enough. Right? Learn the art of cash flow, right? Sculpting your financial future, free training with Mr. Tripp Sawyer. Is Tripp in here today? Let's see. I can't. Give me a couple of seconds. I got to scroll down. He is. Okay. Tripp, I'm impressed with how well he's done with taking over Cover Call Explorer. He's made some some changes to it, which is very advantageous. Everybody seems happy of what he's doing in there. So you want to know how he does some of the cash flow stuff he does, guys? Go ahead and check that out. All right. So let's go take a look at the S&P 500 first. And let's talk a little bit about where that's at and what's going on. Let's see. Oh, yeah. If you guys have trades you want to drop in now, do that. And this way, by the time we get to it, oh, actually, we should talk about that first, right before the S&P. So dropping the trades that y'all did. Brenda's already got hers in there. So what trades did you do? Could be today, could have been Friday or Thursday, whatever it is, that's fine. Drop those in. Let me know how you've done. Funded, non-funded, it doesn't matter, because all I'm going to say is every one of your trades are non-funded. We don't need to talk about funded or non-funded. No, we need to talk about that you're actually hitting the button. And you're going to hear the exact same names week after week who are putting those trades in there. And you should be one of them. Everybody should be one of them. Right? So let's see. Brenda had Wednesday and Thursday, 7.69% on the SPY. No trades on Friday. Nice. Good job. John said Wheel of Fortune, NVIDIA, Google, Beyond, and UVXY. Cash flow of $1,500. Very nice. Jennifer said no trades today. Seems kind of slow today to me. You know, it's interesting, just period, right? The last couple of days and the results on Trade with Rob have been indicative of that, but the last couple of days have shown us very type stuff happening. So Waller spoke at 9:15 this morning. I don't think he had anything really big to say. It didn't really seem to affect the market much. We've got FOMC meeting minutes coming out on Wednesday. I don't think it's going to affect today's market. I think we are just in the end of summertime, the summertime blues, doldrums, whatever you want to call it. We've got a move going on the S&P, but there's just a lot less activity. Yeah, exactly, Brandon. It's a lull. There's a lot less activity right now on the markets than in other months of the year, right? So it's just been a slower month. And again, this break that took place, this bounce that came on this very bottom in here, and has run now, you know, and we're talking 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. Okay. So for today is 11 days. We've had a nice move to the upside. Traders are, I don't want to say they're concerned, but traders looking at this, scratching their head going, all right, did it move too far already? Right? Because now we're all the way back. We're almost at that 882. We're at that midpoint there where we're going to say this fib is no good any longer. And we're going to look for wherever this failure point is to draw a new fib off of. Right? So there is some of that out there of, ooh, maybe I missed out on it. And don't look, that FOMO crap, garbage, junk, stupidity, just stop it. Right? And I know I'm the first one to jump in and say, oh man, I missed out on that. You can't do that. Right? I promise you, I don't ever guarantee anything, right? I can't guarantee anything in life, right? Except taxes and death. And there are ways around both of them, right? Cryogen and become a business, right? Anyway, I guarantee you we will see other up days like today. We will see other runs like we had in the last 11 days. I guarantee it's going to happen again at some point. Don't ever look at it that you missed out. You didn't miss out. You didn't get that trade. That's fine. You're not going to take everyone. You shouldn't worry about that. If it fits your system, great. We've had great moves, and I've had very few trades that I've taken here, right? Part of it being summertime, and it is just that. It's summertime. My wife, many of you know she's a teacher. She goes back to the beginning of September. My daughter, my youngest one, who's still living at home, her and her fiance did get an apartment together. I've already done all the repair stuff on it. They're putting furniture in and some of the final touches right now. They're moving in. Well, he's moving in next week, this week. He's moving in this week. I'm not sure what date she is. But these are her last days home. This will be her last year that I had the summertime with her. And I'm going to do everything in my power to spend every moment I can with her and my wife, running into this end of summer season. So summer for me always is less time in the market. But the moves in the market have definitely scared some people. We've not seen big days on the S&P. Decent. I mean, we're up 22 points today, a little gap up, and a nice little run today. We got above this recent swing high we had in here, which was great. Next one up was this one here. We're just about at there now, right? And then we're all the way back to the zero where the one line where we first started out. So overall, I like to move on the market, but there is concern on some of, is it too late? You know, I'm not seeing any pullback, and that's just it. We're not. We're just getting step up, step up, step up. I mean, it's very faint. It might be hard to see. Let me see if I can darken the line a little bit for now. Let's go to width of dash dot. Let's go to medium thick. All right, so you see that I don't want to really take this off because I don't want that to stay that way. You see that very thick blue line now? That is the 5-period moving average, right? We're not even getting near the 5. If I change this, if I change this over to the value of 3, right? Now we're literally riding right up under it, but guess what? This is a 3-period exponential moving average. One dramatic move one way or another will skew this line all over the place. 3 is way too short. Could you use that as a really short-term gauge of that's my pullback and I'm getting in? You could. I don't do that very often. Just FYI, I just wanted you to see what was going on there, and I'm just going to leave that right where it was, right? I'm not going to change anything on it. I like it faint. I use it for swing trades only. And I really don't want to get caught on the wrong side of the trade, right? And that's what I'm hearing from a lot of traders. So they're waiting. You could use that 3 as a shorter term moving average, but man, you need to realize very little move in any direction will skew that line one way or another. So it is not very, moving averages are not very valid when they're very, very, very short, like a 3. Even 5 is tight, but we use it for one exit type on power option plays. Other than that, not really. Okay. So let's see. PK said, so trying to hit the chat button. Oh, good job, everybody. I appreciate that. Brendan said the midpoint of 55.73, we're above it. Yeah, that, and which is good. And I said that, and I quote, I will not be in a bullish bias until we get above the 55.73. But we gapped up. So look what happened. We had a gap, another gap, big gap, right? Right in there. And our moving averages have not caught up. The 8 is still way behind. Moving averages are in the right order now. So we are in a true bullish bias, but so yes, we are in the right order, but there's still fear. And I wouldn't call it capitulation, but uncertainty in the market. Jennifer said, I'm trying to learn that I don't have to trade every day. Position 3, right? Well, position 1 in the chair, Brendan, is back here. Position 1 is the first one. You're never going to start in fight or flight mode, right? Which is going to be, oh my God, I'm ready to trade now. You're back here is position number 1 in the chair, right? And that would be where it is right now. Moving average moves up. Yeah, I'll draw some stuff on here. We'll kind of get it better. Moving average moves up, and it's kind of where it is right now. I go from position 1 to position 2. All right, I like it. It's better. And then what happens? Now we get a pullback in our candle. We close near the moving average. You know, tomorrow I go from position number 2 to position 1, position 3 in the chair. I'm leaning forward and I'm ready to rock, right? And take advantage. Position 1 is back here. It's relaxed. And you are right. You don't have to trade every day, right? You don't. No one does. No one should ever think that every single day I have to find something to trade. Why? What if the market opens flat today and nothing is really moving? You're going to jump in on something just to say I did it? You can, just to say you wanted to spend money, but it usually doesn't work out well. Yeah, so it is the midpoint, Brenda. Correct. You were right. 54.73 is the midpoint. Brenda said, I'm really glad I learned that. Yeah, it's so important. Guys, it wasn't that way for me as a brand new trader. Understand, 1997, what did the internet look like? Garbage. Garbage, okay? What did online brokerage accounts look like? Garbage, right? I got to this one brokerage firm, Trade City, I think was the name of it, where you could hit your dial-up modem, okay? You hit your dial-up, you would dial in, get the squelch noise, right? It would connect and immediately disconnect. And what happened was, once you connected, it updated all your charts for your open positions only. It'll update all the open positions you had, and then it disconnected. So you can go look at what was going on, prices, and what your chart looked like, and all of that stuff. You want to do it again? Hit the update again, and then we go back in and squelch, connect, handshake, right? That's what it was, a handshake, the squelch. and then it would update and it would go away. And that's what it was when I first started, right? My trading time, keep in mind, I started work somewhere between 6 and 7 a.m. in the morning, East Coast time, and I left for home somewhere between 6 and 8 o'clock at night, right? So, and that was a daily basis. And there were times I was in earlier and stayed later because we ran 3 shifts in the manufacturing plant that I was running, right? I was in operation, so overseeing. So we had plants, 3 shifts in that plant, plus we had plants all over the world. So many days I was there for crazy hours. I didn't get a lot of time. Lunchtime, I stopped eating in the lunchroom. I would eat in my office and shut my door. I'd put a VHS tape on. Yes, that's what we had, VHS tapes at that time. And I would, a strategy from the class that I took, and I'd run that in the background. And I had this laptop type or tablet, not even laptop, this little Samsung looking type or iPod looking type tablet that had a little pop-up antenna on it, and it would connect to the internet. And I paid $400 a month to get data. And between 12 and 12:30, which was my lunchtime, because that's when the factory was on lunch, 12 to 12:30, and I got a longer lunch. I just could never take it because it was too crazy with what I dealt with in our factories. So I'd sit there and I had to find a trade, right? It didn't matter if it was good or not, right? Oh, geez, enter. Woo! Got in one. I'm not even done with lunch and I'm down $200, $300. There was no sense what I was doing, forcing the trade. If there were no trades at that time, don't take the dang trade. That's okay. Don't take the dang trade. I'm good with that. I'm all good with that. Okay. Let's see. Jim said SPX chart might be setting up for an upside down H pattern. Very possibly, Jim. Except it's already gone too far. The H is there, but the upside down H is there. It's just gone way past that 618 level. We went up into the next line. Remember, when you look at Fibonacci, when you look at Fibs, every line that the price moves from this line to this line is one standard deviation move. Okay? It moves up one more line, it's 2 standard deviations. 2 standard deviation move, right? We normally get, on an H-type pattern, we would normally get the move up like this, and you'll get up a little bit higher. Could be, all the way up to here even, but usually it's 2+ lines. So we'll go on the 50 or the 618, and then we get this rollover. We come down here, that doesn't count. That's 1 line, that's 2 line, there's the H. Being that we're already up here, it may H pattern, Jim. It just, the validity is kind of gone. And I want you to think of not even a rubber band. My favorite example ever is stretching out a balloon to blow it up, right? When my kids were little and we would have birthday parties, both their birthdays are in June, so we'd have both their parties. It was wonderful. We had one family birthday party. Right? That's what those are all about, right? You get to invite all the people in your family that you don't really like and really don't care if they're there or not, right? But we did one a year because both girls were in June. And I remember both of my kids, right? My wife would buy these balloons that we were going to hang on. We've got a 6-foot fence around our property, and we would hang them on the post of the fence. We would just tie them up, right? And you're blowing them up, and it would be bigger, daddy, bigger. The balloon says it's 12 inches, right? And I've got it to like 17 inches already. Bigger, daddy, bigger. If you keep blowing that sucker up, it's going to explode in your face, right? That's the same thing, right? When you stretch that balloon too far, it breaks, right? We've stretched this so far now that even if it does H out, and it may work, but it will not necessarily give us the best results, meaning repeatable, predictable, reliable results. There was a student of mine in New York. He and his cousin would come and he's with Wealth Builders now, so I'm not going to say what his name is, but they would come to the New York event all the time, and we're at an event. Great guys, and both of them. We're at an event, and the one guy is saying, "Hey, have you looked at the H pattern off of the 382?" I said, I've tested it in the past and not had good results. He goes, man, you need to check it out again because it's killing me. So I will. Thanks. I appreciate it. And 3 months go by. I'm back in New York event again. And I saw, he wasn't there, but his cousin was. And I saw him and I said, hey, is your cousin still trading the 382H? Because I haven't seen good results. He goes, yeah, right after your event, the last time you were here, he said it stopped working. And that's just it. You may get the H off of here, but it is not as valid as a move, because that 382 of every fib number, of every Fibonacci number, 382 is the least valuable number on the list, right? So if we look, number 0.618 is number 1, and I would say 0.5 is number 2. right? 0.236 is number 3, and I'm going to give a number 3 to a 0.764, and then 382 is a number 4. And yes, I would have to get through the 236 a lot more often than I'll get through the 764 level, but they are both hesitation levels. Those lines both represent hesitation, right? So they have the same level of importance, even though they're so far apart, and I may not ever get to the 764, but they have the same level of importance to them. So the last one is the 382. So I really don't put a lot of credence in it. So if we get the H off here, Jim, it'd be great. Check it. Tell me what you see next week, week after. Let me know what you saw happen in there. I'm always interested to hear it. For an H, I probably wouldn't trade it, but I would be looking to trade it at this point, I would be looking to trade maybe SPY as a Fibonacci 4-step, which basically we are looking at, it breaks the 764 now. So it has to close above the 764, check. It cannot close above the 882. If this was the final, the highest high it got, that's great. Pulls back down, retests the 764 and fails. 0.618 is target number 1. 0.5 is target number 2. And if you're going to do a target 2, you would do a runner only. You would not hold half the position. I would sell 90% of my position, 9 out of 10 if you were doing 10 contracts. I would sell most of the position and keep a runner only if I was going to do that. Right? Big fan of that. So Les said, that's why I color those lines in bold yellow for caution. There you go. Yellow doesn't work well for me only because, Les, I won't see it on that white background. Black background, without a doubt. But my eyes, listen, I've had LASIK done. My eyes are amazing compared to what they were. I was at 20/200, and now I'm at 20, 25, and 20/30 on my eyesight right now. So it's great. But those lighter colors, my eyes are tired. Maybe, I have no idea. But it's harder for me to see those lighter colors on that white background. Yeah, you can make them bold. Yes, absolutely. Thick lines become a little bit of a problem for me with closing price too, just how quickly I view my charts. And that's the beauty of this. Whatever color systematic approach works for you, bold line, yellow, blue, green, orange, pink, white, whatever you do, it's very usable, user-friendly, that you can make adjustments to it to suit what's comfortable to you. And that's really good, Les. But I like your thinking there for those. Okay, so now let's talk, because we really were jumping in on this, on markets. Let's talk, on trades. For me, I didn't get a whole lot off today. I had 1 or 2 trades that I managed that were selling positions. Other than that, nothing really. And it's been this craziness in the market that, yeah, we've had good moves up, but we're not getting any retracements. I'm a retracement trader. If I can't get the pullback, I don't want to take it. It's just me, right? I've been a little more aggressive in some of my switchback trades, which I will share with you in a few minutes. I've been a little more aggressive with that on those trades, and that's just because of some of it boredom. That it's been a couple of days since we've had a trade trigger at all on there, because we're gapping right away from our line and there's no setup. And as much as I would like to take a trade, I am so grateful for when they do just gap away and it doesn't even give me a choice, because my rules have to be met. I am literally the pilot walking around on the tarmac with a piece of paper with a checklist, right? And I'm walking around saying, wheels, are they filled with air? Check, right? Did we put gas in the plane? Check. Get back on the plane. Does the door close? No. Oh, wait. Okay. So I don't need to fill out the rest of the checklist. It doesn't matter what the gauges in the cockpit say, because we can't close the door. We're not taking off, right? Get maintenance, fix the door. I got to do the whole checklist again anyway. That would be, I'm looking at Microsoft. It didn't work. That checklist is gone. Now I'm going to do another checklist on Netflix, right? Looking at a different company. And I'm very much wanting to say, oh, jump in, jump in, jump in. And I'm as much as I'd like that, I'm very grateful that the system says, yeah, you can't do that, right? If you're following these rules, it doesn't work, which is why if you have your plan documented, and my theme this year for the rest of 2024 is going to be get your plan written out for your trade rules, get it written out on one page and put little boxes for check marks next to it, right? Just little squares that you can put check marks in. So as an example, if we kind of did this, right, got all these check boxes here, and this is not going to be perfect by any stretch of the imagination. And then just jot out your rule for that line, right? And then come back And so do that on a piece of paper. And I would recommend doing it on cardstock. So something a little bit thicker. Go to a UPS store, Staples, and get one printed up, right? They'll print exactly what you write up, let them print it up. And actually have them laminated. When you come back and you can put a check mark on it. But I want you to be able to do that, put that check mark on it with a grease pencil or an erasable marker, something like that. I like grease pencil better because it doesn't rub off as easy with your sleeve or your arm or your hand as you're going over it. But you should do this for every trade you're going to take. You're going to put check marks down the box, keep it right in front of you, short and sweet. You don't need paragraphs written out, one line. I don't need to say, find an option with a delta of 65 to 85. I'm going to put delta 65 to 85. That's it, right? Or you could draw a triangle and say 65-85, right? Where OI, 100, open interest greater than 100, right? Or 100 with a plus sign, whatever it is, but have those rules documented and go through a checklist. If you will do this, you will get through it quicker, better, stronger, faster, right? You will get there better and be able to get through the process safely, right? So when we look at S&P 500, what is it doing right now? We're in a bullish bias. I like it. I like where we're at. We're in a true bull. We're nowhere near our moving averages. So I can't get a rank any better than a 2 is my best. I can't get a 1. We're right now at a rank of 3. We're in the middle of nowhere. There's nothing there. Actually, do I need a Fibonacci on this? Let's see. So we've got 55, 37 to 67, 130 points. My Fibonacci number is 170. So no, I don't need to split this level. But, even though we don't need to split it, we need to add an 882. And the reason for it is if we violate that 882, come on. If we violate that 882, I'm going to use the black one. The green is if I'm taking a Fibonacci 4-step trade. If we violate that 882 on the close, this fib is invalid. And we will redraw one once another one presents itself, okay? So, but for now, fib is fine. There's nothing wrong with this fib. Everything is good. But that line right there is going to be a critical level of do we close above it or not. But it's not required as a target or a stopping point or any of that. Just close above. I would take it off after that. It's just to remind me of that level being there. Okay, so we're looking at 55.38 as our first downside target, right? Which takes us down to the 764. We're looking at 5,600, 5602 is where that 882 is. Yeah, but Rob, you just said it's not a target, so do we care? Okay. Here's the thing about it. You and I, as fib traders, we don't care about that 882 level as a target unless it's required in there, meaning the fib didn't fit and we had to split that level. But understand the rest of the free world, the rest of the free thinkers out there who do not see Fibonacci's and do not know that that 882 is there, you're going to see normally hesitation at that level. It could be a day, it could be a week. It could vacillate around it, it could gap through it, come back, retest it, and bounce. We're normally going to see something happen around that level. So knowing that it's there is important. So will it be a stop for now? We're on market now. We're not trading this. So yes, we definitely will be looking at that as a potential place to stop. So that 5602 level is going to be an important level. From there, 5667. And like I said, we're just waiting for, if it breaks to the 882, we're waiting for a failure point in a place that we can actually get in there and say, you know what? That's a good place to draw the fibs. Let's do that now. Because we are going to need a new fib on here at some point, right? Hopefully. Because this doesn't look like a retracement back up into a bearish pattern, right? The recent swing high we had was right here. We violated above that today. That was a big swing high because we had that massive drop in there. If we pull back and look further back historically, ooh, yes, you like how pretty that looks? That's how long we're drawing fibs, right? So we were at the all-time highs back here just a couple weeks ago where our 1 is, that 100 there. Our high was 56.69.67. So 56.70-ish, right? We're at 55.78. So we're just shy of 100 points away from hitting our high there, right? Hitting the all-time highs in the S&P. So we had a good pullback. It was a good opportunity to enter into some more long positions. Gave traders opportunities. It gave guys, folks like Warren Buffett, opportunities to spend some of that big cash they had laying around out there, right? Ulta, ULTA, is the one that Warren Buffett recently bought. Boom, chagalaga. Great move, guys. So Warren Buffett buys it around 3.25. It's at 386 right now. He's got a $60 profit on per share on that sucker, and he bought it at a. He's been buying it for a little bit, so I'm sure he bought some all the way back a couple of months, because he doesn't just go out and say, "Give me $600 million of Alta stock." The stock will go to $900 in a second, right? He's buying 400 shares here, 800 shares there, 2,271 shares. He's buying all whacked out numbers. And it's just, he's got a buying program going on that no one realizes what's happening, and it's not all in one day because you can't spike the volume that way, right? But he's got a buying program that he had in there, and that helped him to acquire those shares. All right. So on the downside, we're looking at the 55.38 level, and then the 54.73 level. That midpoint of our two fib lines will be the next downside. Just wonderful, wonderful opportunities in here. But I need a pullback. So I need the moving averages to catch up a little bit, and they will. If we keep down with these steadier moves, not these big gaps happening every day, gap, gap, gap. Yeah, we had the gap there, but we filled it all in, so nothing. This was kind of flat open. If we have some of that, a little up, a little down every day, even this, not a big deal, right? I'm not worried about that. But these open gaps are the problem as far as moving averages catching up. It can never catch up because we never get a pullback to it. And that's really what I'd like to see, is a pullback. Next ideal spot is that 56.67 level to get above the recent swing high, right? And I think traders are looking for it. Will we see it this week? I think it's possible. I just don't think it's probable. I think it could happen. I just don't think it's probable that it happens this week. But I'm also not trying to predict market. I am not that person. Actually, today's trading topic, the pattern that we sent out, the best Fibonacci trading pattern in the world, is one that's going to help many of you in a market condition where you cannot seem to get it right. And what do I mean there? Well, you had a couple of days up here. You finally decide to jump in a bullish trade, even though it hadn't pulled back to a support, and you get your head handed to you, right? You got a couple of days up here. We had a nice run up. You decide to get in. It moved up a little higher, and you got your head handed to you, right? You got this big run here. You finally got this run up. We didn't see that up. It pulled back, and you got your head handed to you, right? So that even if that type of stuff happens where the market pulls back, there's opportunities for you to trade regardless of what the position or direction of the market is, right? And or your stock, because you can find cash, have the opportunity to go in both directions, bidirectional, up or down. Not everyone always gives us equal. I'm going to rephrase that. Normally, it will not be equal up and down, meaning I can get $5 to the upside and $5 to the downside. You might have $8 up, $5 down. You may have nothing to the downside and $6 to the upside, or 12 or 90, or whatever the numbers are, don't really matter. It doesn't really matter. The important thing is that the setup is there and it's real, right? So I like what we're doing right now with the S&P. We just need some pullback between the summertime blues, last minute vacations, which always happens end of August, right? Some people are back to school, some are not. We're not back in school yet here, and I know in South, many of the places already down there are back to school. I don't remember the dates for it now. Dale Zamzo was really good at keeping me informed with that when we used to teach together, because he knew it, being a school teacher for 30 some odd years, he and his wife. I think they had more than a half a decade of teaching experience between them, right? So, all right, let's look at the VIX. Fear. You see this massive spike last week before, whatever it was. It got us up to over 65. There's 66 in jingle. It's actually skewing the overall picture of the VIX right now. I almost just want to take it off and lie and say the high was 40. But we had a massive spike there, huge fear. And then we had this great pullback. We're at 1481 right now. Call it 15. We're up a penny, which is nothing. 15 on the VIX. We're back in low, right, as far as our fear factor comes. It's nothing for me to even worry about this. I look at this and go, oh yeah, it's who cares, right? VIX is almost not valuable at this point because of that, right? We're so low, we don't care. Do I think it's going to stay there? I think it's going to get back down into that 12, 13 range again on fear. And a lot of it's going to come down to, and will come down to, on the S&P, are we going to break through the recent highs? And I think that's what's keeping the VIX the last couple of days doing what it's doing or not. I just kind of get that big bar off. Ta-da! You can see a much better picture, right? So we're getting downward moves, which are great, but now we're seeing this flattening out taking place. We had a nice sized bar, about the same bar, smaller smaller so far today, right? Just everything's kind of tightening up a little bit right now on the S&P, so which is what the VIX measures. All right, beautiful. Let's see. Jim said, I use Bollinger Bands on my charts. The daily SPX top Bollinger Band is at 56.39. It is flattening out. Normally when it flattens out, it acts as resistance, especially after a long bull run. I'm watching what happens around this area. It might be a pullback then. Yeah, and very well might be. And we're looking at the recent swing high, which is right here. We've broken through that. And we don't have another swing high till we get to the all-time high. So very well might be, Jim. Okay, let me go back into presentation mode, right? And let's talk about the best Fibonacci pattern to trade today. And when I say today, it's actually become my absolute favorite Fibonacci pattern. I remember when all I really traded was zero line breakouts, and what I now call today H patterns and zero line breakout trade, which is what I call it today, was not the name of it at the time, but it is now called the zero line breakout. I've got a much better refined set of rules to it. All it took was breaking out of that area there, and that was a trade to enter into. No ifs, ands, or buts if it broke out. We've got better rules today, which keep a safer opportunity to be more often be right in a trade, and so forth. But the best Fibonacci pattern, looks like my team doesn't know how to spell pattern. Is that like pitter patter? The best Fibonacci pattern to trade today. It's amazing when I have to catch spelling mistakes. Me of all people. And the trade. Let me grab a notepad here. All right, the trade I want to talk about today, and we've gone through this before. Switchback trade. And I'm going to give you a very high-level view of this trade right now. But the switchback trade is bi-directional. You can trade it up or down, right? And that's the goal. And remember, some trades, some candidates, you'll have a great opportunity in both directions. Other ones, you'll have a better opportunity one than the other. And there will be some we shoot for both directions. There will be some that you can only get it in one direction. You just have to make the determination are you going to pick it or not. So right now, I would venture to say, if y'all are trading now, looking to trade now, and end of day, this is where the market closed. End of day, you're seeing where the S&P 500 is. You know that 70 to 80% of all stocks move in the direction of the S&P 500. So you're finding bullish candidates for tomorrow. You go do your research tonight. You spend a half hour, 40 minutes, whatever it is, 10 minutes, whatever it takes you. You do your research. You get your 3, 4, 5 bullish candidates for tomorrow. Tomorrow, bad news comes out. The market gaps down, and you're sitting there going, what do I do? Well, maybe I could trade some of mine bearish now. And then you start getting into this FOMO mode again, this fear of missing out mode, and you're trying to force a trade to fit so you don't miss an opportunity today. And again, I get the part of not wanting to miss out on the opportunity. Been there, done that, got the t-shirt, right? I can tell you it doesn't work. There's always going to be another trade, coming around the bend. Don't worry about that. This setup, if you have patterns that have bi-directional movement, meaning there's two ways that they can go, right? If you have that, then even though the market's not up today, if you had Microsoft or AMD or whomever, Home Depot, and it was sitting at a key level, and if it moved up, we could trade it bullish, but if it moved down, we could trade it bearish. It doesn't matter what the market does, because the 70 to 80% of all stocks that move in the direction of the S&P 500, this fits it all the time. Because it doesn't matter the direction if you got a bi-directional trade. Right? I've got friends of mine that are traders. They have email lists that they have, and they send out directional trades to their groups. And it's just that. It's one direction. All right, we're bullish on this tomorrow. We're bearish on that tomorrow. Whatever it is, they have 2, 3, 10, whatever the number of candidates they're sending out in their programs. And if the market doesn't move in that direction, no one's taking any trades. Right? This gives you an opportunity, regardless of what's happening, to trade it in that direction. So a switchback trade needs to close near a key level. Let me define key level for you. This is very important, right? Key level near, not at, a key level. What is a key level? Example, fib line, horizontal support or resistance, etc. Right? Not a key level. Moving averages, so I'm going to put MA, moving average, or other indicators. In other words, the only thing that is a key level is some kind of support or resistance line. Now, could you do it with diagonal trend lines? You could. I don't find as much success with them. I like it much better with horizontal. Horizontal support, fib line. Zone like Brandon trades, all that works. Horizontal. It's the trending component that I am not as crazy about inside of there. Okay? All right. So, candidate selection. Right? There's a couple different things you could do, right? And basically it is I don't want to say do your daily research on your list of fib candidates. Right? Do your research on your list of fib candidates. That's the very first way to do it, right? You could use the monster market movers fib list to find your candidates. So I'm going to ask a question now, and I don't know how many yet, so I've got to go look. I'm going to ask a question, and I can't ask it until I see how many. So I'm going to go back and look at last month's monster market movers fib list. We had 169 candidates in there last month. How long will it take you to go through 169 candidates per day? Is it 1 minute? Is it 1 hour? How long do you think it would take you to look through those 169 candidates? Go ahead and type a number in, guys. If you have a list, they're in your Omega charts or on your TOS or wherever you're using. How long will it take you to get through them? 170 candidates. That's pretty good, Stephanie. Okay, Barry. All right, Brenda. Okay. So I'm seeing all different times. There we go. Trips. So Stephanie put 5 minutes. Trip put 5 to 8, which are both fib numbers, right? I've got as high a time as 3 hours, 2+ hours, right? And everything in between 5 minutes and 3 hours, right? 3 hours seems to be the longest one. I don't know why I changed that back to this list. I wasn't ready yet. So let me go back again. It's not as if I'm trying to hide something here. Okay. I'm going to narrow this up. So if I sort this list by Fibit, some of these stocks, CF has the smallest Fibit, it's $4. And if I sort one more time, Eli Lilly is a Fibit of $67. So there's definitely some disparity in it. Okay. 169 stocks. And I am not putting anybody on the spot for this or anything like that. Nothing. Okay. There's 169 stocks here. My assistant, my executive assistant, who had never saw the stock market before she came here. She's a very young woman, Does not have any experience with the stocks at all. I spent a half an hour with her one day teaching her Omega charts, how to use it, how to update it, all of that, and teaching her to find stocks that are closing. When I say closing, she does this before the market closes, but are near a key fib level. That's all it is. Will she be perfect? Nope, she's not perfect. Do I find one occasion that's off? Yeah, because she does this at 3 o'clock in the afternoon and things might move by the time I do the analysis at 4. Okay, but at 3 o'clock, I get 3:15, I get an email from her with 10, 15, 20 candidates in it. Okay. And regularly, I get that list from her. All right. And when I say regularly, I get it every day. Whether or not I can produce a video of what's on there or not, or get to take advantage of it that afternoon, is not the same. Right. So Jim said, if taking 5 seconds a candidate, that would account for 14 minutes if I did the math correct. And maybe, Jim, I don't know. I don't know if it takes me 15 seconds to identify or not. Now I'm on real-time data right now, so I'm going to shut the real-time data off just because it's going to slow everything down if I'm using real-time data, right? So if we just start whatever this is, SMCI, of course, fib is not pulled out far enough. All right, so I'm not going to pull any more fibs out at all, right? And really the best way to do this is go over to template number 1. Right, for right now, if you want to get your indicators out of your way. So this one doesn't work for me. I like this. Nope. Yep. Nope. Maybe. Yep. I'll hit the space bar. Nope. Actually, yeah, that one's not bad. Nope. Nope. But Rob, what are you looking for? I want to see something that's closing near a line, right? And we'll just say that, you can do it at the end of day, right? I get mine done during the day because I want to get a video out tonight before the market closes. Yeah, so this one's close. It's not perfect, but it's close, right? So I put a couple of check marks in here. Hopefully there were no others that I just missed. Yeah, I think we're okay. Right, so now if we go over to template number 2, which has my moving averages on there, and I do mine with it, right? So no moving averages there. I like this one a lot for Lily. HubSpot, this is a one directional trade, only to the upside. And I'll explain to you what that means in a minute. This is one direction only. This is bidirectional. I like that. This is, this would be one direction only. We don't have this one down. All right, so it takes my assistant who knows nothing about the market to go through this 169 candidate list 20 minutes, maybe 25, because of the way I just showed you to go through this. Just identify if it's near a line or not. Don't overanalyze it. Is it near a line? Put a check mark next to it. Hit the space bar on your keyboard and then down arrow to the next candidate. Do not think about this. Do not spend any time on it at all. Come back after and go through and say, are they good or not? And spend a few extra minutes there of looking at 10 or 12 instead of really trying to deeply analyze 169 candidates, 169 stocks, okay? So what I'm looking for in an ideal world is something like Lily. Again, assuming this was a closing price, right? And those of you that get my Trade with Rob videos have seen me do this analysis before. Those that don't, haven't, so watch. I would say this would be a bi-directional trade. Since we are in a true bullish bias, let's talk about the bullish one first. I would like to see us pull back a little bit further down towards that 916.83. It doesn't have to come all the way down and bounce. This would be a bullish entry. That dot, all that dot says is we're taking the trade on the bounce, not where we're taking it. Just, it came down to 917.25. It bounced. 918, we're in the trade, whatever that number is. Okay. So this is resistance. Your target's going to be set somewhere down below there. So on a stock like this, I'd probably have mine set at 937 would be my target, and I would be in this trade about 918, 919, right? So let's say the entry was 919, right? And my stop is going to be down here right about just below that 917 level. So 915, 14, let's call it 914. 914 is my stop. Right? This is all bullish entry now. Okay. Give me a 1 for yes, a 2 for no if this makes sense so far. Doesn't make good. It's not a good idea for me to do the second one if I know the first one didn't make sense yet. The number one key, if you need help, it's the upper left-hand corner of your keyboard is where you'll find it. And if you need the 2, it's right next to it. Yeah, and I didn't get into the earnings on it, Jim, but yes, it is a valid point that earnings, right? If there are earnings, you'd want to check those. Okay, good. So now we're going to use a red pen. Say for the downside, I would like to see a move down, a retest, and a fail. Since I've got a 100-point level in there, that's going to now be my support level. Is the 100-point level, 900. My target, my entry comes right off of as we bounce down, right? My target on this is going to be 905, 904, 905. 905. Right? To the downside. And my stop will be just on the other side there. Right? So if I get in this at 915, 14, call it 915, it's easy math, down to 905, I can make $10 on the downside. On the upside is 19 to 37, 29, 39, 18, so it's 18 points on the upside. So you can see you got a better move to the upside than you do the downside. And it's math, is all it is, right? But this trade allows me that it doesn't matter. I'm in position number 1 in the chair, right? Just like Brenda, Jennifer, we talked about, right? I'm sitting back here, position number 1 in the chair. The market opens. I'm sleeping. Oh, my eyes when the bell goes off and I go, oh, it went up. Okay, great. I'll trade this one up then. Or, oh, it went down. Great. I'll trade this one down. That's all I'm looking to do. That's all I'm looking to do. Right? Les said, does this work best on a daily chart? Yes, I'm not doing this analysis on the intraday because it really wouldn't give us a true picture. And when I say the analysis, I'm not doing what I just did here, Les, on the intraday. I'm doing it on an end of day chart. Now, if you had to do this close to the end of day, you're fine, because what's the worst thing that happens? You did this at 3 o'clock in the afternoon, and for some reason, this stock between 3 and 4 did that. Okay, no more trade. It's just not on my list tomorrow. Who cares? Gone. It'd be no different than pre-market tomorrow. We did that instead. Puts us in the same place. Does that make sense, Les? All right. So now let's look at one or two other. HubSpot, HUBS, right? I'll pull it out. I did it visually. I could see it. So do I like this trade? Yes, I like this to move up, retest, bounce. 522 is resistance. How about the downside? I don't like it. We're talking about 500 down to 487. Yeah, you could take that trade. You can take that trade. This sucker moves $18 a day. So maybe, but I would, if I took this trade, I probably am not walking away, because remember, I'm going to get in this probably at 497. I'm going to get out of this at 493. I only have about $4 to the downside, so I would not take this to the downside. To the upside, I'm all over it. I love it to the upside. To the downside, nah. Meta has a good bounce to the upside. We have something in the way. This is an obstacle for our clear and concise entry. Clear. I have a clear path to the next level. I do not. I have a moving average there, which can cause hesitation. So I could take the upside, but not the downside. Costco works both ways. We're already down here. Retest and fail, right? I got all that way down from 75 to 55. Breakout, retest, and bounce. I go from 75 up to 95, 97, $20, $23, somewhere around there, right? Opportunity for both. Here is TMO, right? Yeah, upside, possibly. Ooh, looks like we ran out of lines. Yeah, this is probably a -1 up here. Oh boy, yeah. So I need a negative 809 in there. Okay. So lots of room to move. This one to the downside, not so much. I can only move down to the 8 moving average. right? So I'm not going to do this one to the downside. I'm only going to be interested in taking this trade to the upside. Yeah, so we could turn on real time and see what it did. Let's see. It's going to take a couple of seconds for that to set up. Connecting to streaming. Costco and Meta will be there already, but some of the others may not. And that's all we do is I go in there and I preload them like that. But I have opened my quote board, set on 5-minute sessions with all my candidates there. So it pulls all the real-time data in immediately. All right. So on Lilly, we didn't get that big of a move down. So, you know, maybe a little bit of bounce off of there came in. HubSpot. It's got the, data is there, but it really hasn't broken above. And retest, Meta. So we pulled back, we bounced, right? Opportunity right there, 523, it ran up to 531. Costco, nope, gap down and never got to retest the level. TMO, okay, broke out. The question is, did it retest and bounce? Right? So, I mean, there you have it. That's them, folks. But this strategy right here, this switchback trade, to me, it right now is my absolute favorite fib trade of all time, is the switchback trade. Because, and the side note for this, we spent a lot of time trying to name it. Tripp's actually one that came up with the name for it. And I asked an Inner Circle mastermind group, I've asked here for ideas on it. And this really, to me, is what I call the red Ford pickup truck trade. The red Ford pickup truck trade. What does that mean? You go and buy a red Ford pickup. You drive it off the lot, and all of a sudden, every other car on the road is a red Ford pickup. It's like, what the hell just happened? Were they giving them away somewhere? You bought it, and now you start to see it everywhere. When this trade was announced, and guys, if you're in Inner Circle, if you're in Mastermind, if you talk to Tripp in one of his classes, ask him, right? Do you see these over and over again? And his answer is yes. Everywhere I go, I see these over and over and over again. Me too. Everywhere I go, it's like, oh, that's a switchback trade. Oh, there's a switchback trade. Oh, there's a switchback trade, right? And I get 10 to 15 of them every single day. Now, guys, I do this in Trade with Rob I try to do 3 days a week, right? It doesn't always work out, but I try. You can see we had from the 16th, so Friday's trades, Microsoft on Friday was a break even. Netflix never gave us a trade setup, and SPLX XL, we made $18 on. Woo! Only one contract, guys. That's all we're doing is one. You don't need a lot of contracts to do this. We are up since the beginning of the end of June 25th, with just one trade a day, 3 trade setups we put in, and one contract. We've got $5,452.44 profit P&L. 16 candidates that are winners. You can see it at this row here, right? 6 that have gone against us, 2 that will break even, and 24 that never produced a trade. And that's okay, right? We are at $227.19 on average per trade. So the last couple of days have not been very good, meaning we're not getting a trade. Why? We're not getting a trade here because we're not getting a pullback. And if we don't get pullbacks, we don't take the trade. Now, you can take it. You can take my rules and go, ooh, I'm going to use your system, Rob, and do a slight modification to it and trade it as a breakout trader. By all means, you go for it. All I ask is you send me what you're doing as in a quick little jot down your rules. I'd love to see it, right? I don't do well on the breakout trades, so I'm not taking those. My system with retest and bounce or retest and fail has a much higher probability of being right than if I take a breakout on my system. And again, that doesn't mean that that's the best way to trade. It's just the best way for me, right? So the S&P has not been very cooperative. So I am actually very grateful. As much as I'd like to take the trade, I'm very grateful that the system has said, yeah, no trade today. You're in position number 1 in the chair. Just chill out, man. It's summertime. Take it easy. When the trade presents itself, you'll take it. I mean, you look here, American Express, we had $270 of profit on that winning trade. 180 here, wrong line, come on, 180, 504, break even, 360, $729 a profit, $72 a profit, $1,008 a profit. And yes, we do have trades that have gone against us. Signal, we lost 170. We lost 255 on HCA, which was our biggest hit, I believe, was HCA. Yeah, it's our biggest hit there, right? But overall, I'm very pleased with what the results of the setup are. So Les said, how much do you suggest in an account for this method? Enough to buy one contract less of whatever companies you are looking to trade. That could be predicated by price. So if you remember when we looked at Omega charts and I sorted by Fibonacci, you may say, yeah, I don't want to buy options that cost more than $8, $12, whatever your number is. Then you're probably not going to trade a Lilly. It's going to be a higher price option than that. So you could also eliminate those candidates in your search and say, okay, I want to take that list and I'm only going to find candidates that have a Fibonacci of 16 or less, which would give me the right price range maybe for you. And maybe say, yeah, I don't want to go down as low as 3 or 4. I want the Fibonacci to be at least 6. You can set that range, minimize the number of candidates in there, but then you're going to need to start looking at your options pricing to see what each one are going to cost you. So if you have more than one candidate in a day, so less, you're going to have to make something, then you need double, right, to be able to afford it. But these candidates, on the most part, unless you get to the higher price ones, are going to be $700,000, $800,000 per contract to trade one. You might get a $1,500 or $1,800 on the very expensive ones, but it's going to be fewer and far between. And day of week makes a difference. If I'm trading Netflix on Monday versus trading Netflix on Friday, I can get in the Monday trade at $18 or $22. I can get in the Friday trade, which will be expiring that same Friday. I can get in that trade for $9 or $10, right? So it just depends day of week and so forth. The other thing is, folks, remember, if you have less than 25 grand in your account, that puts you in a pattern day trader rule, which means you can only do 3 intraday trades in a 5-day period, right? I will tell you this though, without hesitation, confirm it with your brokers. If you get rid of your margin account, that wipes out your ability to only do 3 intraday trades. You are now relegated not to the number of trades, but the dollars that you've spent already in your account. If you've got 10 grand and you did $1,000 trade today and you got out of $1,000 trade, you could do 9 more $1,000 trades today. Then you've now spent everything in your account and you can't do another trade today. Tomorrow you can do another 10 $1,000 trades with only a $10,000 account. The margin account prevents you from doing those trades, not the ability to trade. Brokers don't want to tell you that because they'd rather you do not trade 10 trades in a day. Yeah, Costco's a little bit older, Jim, but we're still within the range. 9 months, 8 to 10 is where we start to look to redraw. It's still producing well for us, so we'll keep it. But until we can get a new one to draw it from, well, we're gonna be keeping it where it is for now. So excellent. Hey, we went a little bit late again, guys. That just seems to be the nature of the beast. Was this helpful? Walking through this and kind of showing it, guys. This is me pulling the curtain back and saying, "Oh, here it is. Do this." So go over, Andrew, drop in tradinglikeaboss.com. Go to tradinglikeaboss.com. Go and register for this email sequence to come. Every day we put out this video, you'll get an email from us that says, candidates are there. Here's the candidates there. Why do you want to get that? Because the list that's on YouTube has 3 candidates in it every day. If I have 18 candidates to choose from today, I am going to include in the email, and we're finalizing the email right now, I'm going to include in the email every candidate on that list. You're going to get that symbol is going to be there for you where you could plug it in yourself and see, does this one work or not? Right? So Andrew dropped that in. You can go ahead and click on that. Brendan said, I especially like the reminder that you don't have to trade every day if there isn't a setup. Good. Very helpful. A lot of data in there. Very helpful. Thanks so much. A lot of thumbs up. Excellent. So everybody have a great rest of your day. God bless. And I will see you all at our next update. Take care, folks. I will see you soon. Bye for now.